Good morning. Welcome to today's AMRO's press briefing of the quarterly update of the ASEAN+3 Regional Economic Outlook, the AREO. I'm Daisy Wong with the AMRO's communications team. Let me first introduce our speakers today. Excuse me. Sitting next to me is Dr. Khor. He's AMRO's chief economist. And also joining us today is Mr. Alan Ng. He leads the regional surveillance group and he is in charge of the AREO. So we'll start today's briefing with a short presentation by Alan, and then we'll take your questions. And before we move on, let me quickly talk about the embargo. As we speak, the embargo has just ended at 10:30 a.m. Singapore time, so you can go ahead to cover it. I think without further ado, I will now invite Alan to give us the presentation.
Right, thank you so much, Daisy, and good morning, everyone. Right, so let me begin by sharing with you the three key messages from our January update. First, ASEAN+3 growth remains solid at 4.2% in 2024. And this was supported by resilient domestic demand and improvement in exports. We expect this momentum to continue into 2025. Second, inflation has largely returned to pre-pandemic rates across the region, with headline inflation expected to remain low and stable in 2025. Third, while our baseline outlook remains steady, external uncertainties have increased markedly, and this is particularly with the potential policy changes under the new US administration. Let me elaborate on each of these messages, starting with growth. So the region's resilience is anchored on two key factors. First, domestic demand continues to show strength. Now, while household spending was more subdued in the +3 economies, ASEAN's consumption remained robust, supported by favorable employment conditions and moderating inflation. Investment activities are also picking up. Second, and relatedly, external demand has also improved. Our goods exports expanded by 5.2% in the first 3 quarters of 2024, and this was the strongest since 2022. And of course, this was actually boosted by the global tech upcycle, and tourism has also exceeded pre-pandemic levels in many of our economies, in part supported by the ongoing return of tourists from China. Turning to inflation, we are seeing a clear return to normalcy for most economies. Both headline and core inflation continued to moderate in the fourth quarter of 2024, with headline inflation now back to pre-pandemic rates for most economies. Now, this marks a significant milestone in our region's recovery from the pandemic period's elevated price pressures. Two key factors are supporting this trend. First, global commodity prices have more or less stabilized. The large spikes we saw in shipping and energy prices have largely abated. Second, and more importantly, core inflation remains well contained, indicating well-anchored inflation expectation across the region. However, we are seeing increased volatility in financial markets since our last update in October, and this has been driven largely by the uncertainty around US policy direction. Regional currencies have faced depreciation pressure against a stronger US dollar since our last update, while equity markets have also weakened for most in the region. Several regional central banks have begun monetary easing in response to moderating inflation. However, the divergence between US and regional interest rates will likely complicate monetary policy decision going forward. I will expand a bit on this after this. Looking ahead to 2025 this year, we project regional growth to remain steady at 4.2%. Now, this is a slight downward revision from our October forecast of 4.4%, primarily reflecting a more challenging external environment, including in our baseline assumption an increase of US tariff on China in the second half of 2025. For the +3 economies, we have revised our growth forecast down by 0.3 percentage points. For the ASEAN economies, growth projection has been reduced by a more marginal 0.1 percentage point. On the inflation front, we expect regional inflation, excluding Laos and Myanmar, to remain stable at 2.1% in 2025. This slight increase from 1.7 in 2024 reflects two main factors. One is actually continued improvement in domestic demand in many of our economies. And secondly, some supply side adjustment, including reduction in energy subsidies in some of our economies. And more importantly, inflation remains well contained, well anchored, and within targets for most of our economies. Let me now highlight two key risks that have become more prominent since our last update. This risk map has all a collection of risks that we have identified in our update. Fuller description is in our write-up, but let me here just highlight two. First, the protectionist trade policies from the US have emerged as our most immediate concern. The new administration has signaled potential aggressive measures, including substantial tariff increases. Now, there is still a lot of uncertainty on how this will pan out. To anticipate, besides our baseline forecast, we also done a scenario analysis, which I will turn to shortly. The second risk is that of tighter global financial conditions. It's related. Recent US economic indicators, including a somewhat persistently tight labor market and firmer core inflation, have fueled concerns about sustained inflationary pressures. And this could lead to the US interest rates remaining high for an extended period, creating a growing divergence between US and regional monetary policy paths. So we can expect, besides tighter financial conditions, greater market volatility ahead. Let me elaborate on our scenario analysis for what we see as the most immediate risk, a more aggressive US protectionist policy. In our baseline scenario, in our baseline forecast, we actually assume a 25% increase in tariff on Chinese imports in the second half of this year. However, given the uncertainty, we have also considered various other scenarios. Let me share with you two scenarios here. One is if the US implements 60% tariff on China and 10% tariff on other economies. Without retaliation, regional growth could be lower by a further 0.1 percentage point this year. Second scenario, and a more concerning one, is if affected economies retaliate in kind. The impact will be substantially worse. Growth could be lower by 0.6 percentage points this year, and the negative effects will accumulate over time. By 2026, 2027, we could see growth being lower by 1 to 2 percentage points. This will be the slowest regional growth since the Asian financial crisis, excluding the pandemic years. Let me conclude by reiterating our key messages. The ASEAN+3 region maintained robust growth of 4.2% last year, supported by strong domestic demand and improving exports. Looking ahead to 2025, we expect this momentum to continue, though with some moderation relative to our previous expectation given external headwinds. Inflation has largely normalized across the region, and we expect it to remain low and stable in 2025. However, we face significantly higher uncertainties. While the region can weather moderate trade tensions, an escalation with retaliation would have serious implications for growth. At the same time, policy-generated disruptions to the ongoing global disinflation process, particularly from US policy changes, could complicate the region's monetary policy decision going forward. Meeting these challenges requires careful policy calibration. In the near term, policymakers need to balance the trade-off between growth and inflation. Exchange rate flexibility will be crucial in absorbing external shocks while maintaining policy flexibility to respond to evolving challenges. Looking further ahead, focus must be on rebuilding policy space while strengthening medium-term growth prospects. This calls for continued structural reforms. And perhaps most importantly, in this challenging global environment, maintaining our commitment to open and rules-based economic engagement will be crucial for the region's continued growth and resilience. Let me stop here. Thank you.
Okay, thank you. Thank you, Alan, for your presentation. We have received some questions from you in advance, so we'll start with them. Please feel free to continue to add your questions in the WebEx chat box. All right. let's begin with why have you revised down the regional growth forecast for 2025? Yeah.
Thank you, Daisy. Yeah, so as you can see, heard from Alan just now, we have revised the growth rate slightly down from our October forecast of 4.4 to 4.2. So that's shaving down by 0.2. And that's mainly on account of our assumption that the new administration, Trump administration, will slap on a 25% additional tariff on China in the second half of the year. So because of that, it's going to affect China more than most of the other countries. We have shifted China's growth down from 5.1 to 4.8, but for the rest of the region, much less. So overall, growth will be around 4.2%, which is a very robust growth. We still think our assessment is that the region is still very resilient after having gone through, the pandemic and the big shocks that they have gone through and recovered rapidly. As Alan said, we see the growth being driven mostly by domestic demand, but also tourism is continuing to recover, and also the export sector. Export sector began to recover last year, and it's going to turn around this year, but it will still remain relatively strong and provide support to the regional economy. So despite the tariff, in the second half of the year, we think growth for this year still remain pretty strong. The impact of the tariff will be, quite small. It becomes stronger next year and into the year later, as you can see from Alan's presentation.
Okay, thank you, Dr. Khor. I think tariffs is a key concern. We got quite a lot of questions on tariffs, actually. So the second question is, what are the potential impacts on ASEAN+3 economies if President Trump moves ahead with his 60% tariff on China and 10% on the rest of the world? Could any country in the region face a recession under this scenario? And there's also question from the ASEAN+ and ask for the view on different Trump tariff scenarios on China, like 100%, 60%, 30%, and a year's delay. What are the relative impacts of each scenarios?
Yeah, so I think Alan has already presented the three scenarios that we have. The first one is our baseline, which is 25% increase in tariff on China. And then the second one, which is a pink bar, is the one where we slap on a 60% tariff. And the third one is the one where there's retaliation by the region in terms of imposing tariff on US imports. So you can see the impact on the region from the chart there quite clearly. Even with a 60% tariff, you can see from the pink bar that the initial impact will be quite small, but then the impact accumulates next year and the year after, and it could get as bad as a 1% decline for China, and for the other countries, grows about 0.6, 0.7%. I think that if the region retaliates, on the other hand, it will be much worse, the impact overall. In which case, as Alan said, by 2026, 2027, the impact could be as bad as 1 to 2% of GDP. So we hope that even though Trump is going to be imposing tariff, the response doesn't have to be in kind and commensurate. So we think the region is relatively resilient and robust, and we should be able to absorb some of these shocks. But there will also be a reconfiguration of trade across the region, which is why, in our view, ASEAN will be affected much less than China. Yeah.
If I can just add that in all our scenarios, we don't expect recession even under the most severe assumption here.
Okay, thank you.
Maybe I just add that, I think those of you who watched the inauguration yesterday know that there will be no immediate increase in tariff. Trump has decided to set up this committee to look into how China, is meeting the agreement that they had last time in terms of imports. So even if he decide to go ahead with the tariff, I think it will be imposed much later. But we still think that our baseline is that he's going to impose additional tariff on China. The question is when and the degree. But already you can see the reaction from the markets. The moment he make the announcement, that there will be no immediate tariff on China, the market begin to rally, and the US exchange rate take a tumble. And then when he announced again that he's going to impose tariff on Mexico and Canada, the market react again. So market is very sensitive to their expectation of how much tariff is going to be imposed and when.
Okay, thank you. And then one more question on a more regional question. Do you foresee the continued depreciation of regional currencies throughout 2025? As the US Fed is expected to slow its rate cuts in 2025, what policy options should regional central banks consider, especially for ASEAN countries with limited policy space?
Yeah, the currency is already, as I just mentioned, very sensitive to the perception of the measures that Trump is going to take on both, not just on tariff, but also on the other policies that he's announced. And so they have depreciated quite a bit once, and under the perception that Trump is going to impose tariff. But at the moment, I think the market is still reacting, and for the economies in the region, they're all moving more or less together. But I think because of what Alan mentioned, the inflation is relatively well anchored and domestic demand is relatively robust. They have policy room to even with the pressure on the exchange rate. The pressure on the exchange rate is coming mainly from the differential exchange rate between the US and the regional interest rate, and also perception of inflation in the US, whether it's going to rise, which will then determine to what extent the Fed is going to hold interest rate or maintain interest rate high, or even raise interest rate. So those are the factors that drive the movement in the exchange rate. But despite that, we saw recently that some of the central bank in the region have decided to respond to that was a few days ago before Trump came to office. But for instance, Bank Indonesia decided to cut the rate to hold rate rather, cut rate, sorry. And that's because inflation has come down so much, and growth is still relatively strong. So they feel confident enough to be able to cut the rate. On the other hand, some other countries like Korea has decided to keep rate even though the market expects rates to be cut, and that's because of what's happening in the domestic economy. So I think the region is relatively resilient, and whether the policy measures they take will depend very much on the individual circumstances.
Thank you, Dr. Khor. Another question on currency, but more country specific from China Daily. As Trump takes office, how do you see the risk of China-US disputes over exchange rates escalating again, such as in the form of US alleging China a currency manipulator, or US seeking a yuan appreciation against the dollar? China Daily also asks how could be the ramifications for China and the broader Asian economy if that happens? Based on China's exchange rate policies, do you think those allegations would hold water?
Yeah, I think China was already on the list. The Treasury comes out with a list every year of countries which are currency manipulator. But I think given that Trump has threatened to impose a tariff on China, regardless of whether they are classified as currency manipulated or not, depends very much on what Trump decides to do next in terms of the tariff. As the ramification for the rest of the country in the region, I think that, as I mentioned, depends very much on. I mean, if we look back a few years ago, when Trump imposed a tariff, what we see is that there's a reconfiguration of trade in the region, and some countries benefited from the reconfiguration, and because of that, the trade surplus actually increased even more, right? So that's an outcome of market forces, playing out, because the market will try to close the gap whenever they can. So you have the China +1 play, and as a result, trade shifted from China to some of the other countries in the region, and so the balance of trade with the US shifted from China to some of the other countries in the region, and also to other countries outside the region as well. And as for the exchange rate, the issue about whether China is deliberately pursuing a weak exchange rate policy, we can see from the statement coming out from the PBOC, and also assessment from other organizations, the IMF, for instance. They have said that the Chinese maintain a managed exchange rate policy, and in their view, the aim of the Chinese exchange rate policy is to maintain stability of the exchange rate on a currency basket basis. So the Chinese have maintained the RMB against a basket of currency, which is like a snake. And also, if you look at the market forces, most of the time when the RMB is depreciated, it's because of market forces, and the fixing rate by the PBOC is usually much more appreciated than the actual rate, right? And only recently has the RMB moved back up again because of the statement from Trump the other day. So I think overall we don't see any real strong case that China is manipulating its exchange rate or keeping its exchange rate deliberately depreciated. On the contrary, we think the Chinese would much prefer a more stable exchange rate. If you look back, the exchange rate fluctuated between 6.3 to 7.3. So they are actually quite flexible on the exchange rate, but it has to be driven mostly by market forces.
Thank you, Dr. Khor. One more question on China before we move on to other countries. AMRO has one of the most optimistic forecasts for China among international organizations. What underpins this positive outlook of AMRO?
Yes, indeed. We have always been a bit more optimistic about China's growth forecast. Back in October, I remember that a lot of other houses or analysts have already reduced the forecast for China quite significantly, from 5 to 4.3, 4.5. At that time, we reduced our forecast from 5.2 to 5. But that was right after the seventh plenum, the plenum in July, and also in September. The Chinese had taken a lot of measures to support the economy, and that's when the market rallied very sharply. At that time, our view was that the Chinese would do whatever it takes in order to keep the economy going. Where we went off was basically the real estate sector. We had expected the real estate sector to turn around faster, but it didn't happen. And because of that, domestic demand was quite weak. So we did a study on the China's real estate sector, and our assessment then was that the real estate would turn around this year, maybe in the middle of the year. And already we are seeing signs of turnaround in China's real estate in terms of transactions. So as a result, we kept our forecast relatively strong at 5% in October. And as we can see from the Chinese authorities continuing to take measures to support the economy whenever the sign shows that it's beginning to weaken again. And if you look at all the measures that have been taken, I think we are quite comfortable that going forward, the Chinese will continue to do whatever is necessary in order to support the economy. They have shifted from in terms of the monetary policy from prudent to accommodative, moderately accommodative, and also on the fiscal side, more proactive fiscal policy. And they also announced that they'll be willing to take a counter cyclical policy. So these are all the announcements they've made in terms of their intention to shift. So our sense is that the Chinese, will take measures to support the economy and then wait and see what happens before they do more, right? And I think that's the appropriate approach to take, rather than the bazooka approach, which some analysts are advocating. We don't see the need for a big stimulus package at this point in time. We think they should be more measured, and they should respond accordingly, depending on how the economy responds to the policy measures.
Okay. Thank you, Dr. Khor. Question on the Philippines from the Philippine Star. Are there changes to the forecast for the Philippines for 2024 and for this year? What will drive growth? And there's also a similar question from ABS-CBN. Very similar. How is the Philippine economy faring versus regional peers? How will the U.S. tariffs affect the Philippines?
I think if you can look at the forecast that we made, we have Philippines, one of the stronger, faster growing economy in the region. This year, we had shaved the growth down to 5.8, but that's because the third quarter was very weak. And we feel that next year, we kept the growth forecast at 6.3%. So that's among the highest in the region. And that's partly because, the BSP has started to also ease monetary policy. And the governor has announced that there's scope for them to continue to ease because the real interest rate is still pretty high, and we see signs that the economy is beginning to respond. So for next year, we expect growth to be much stronger and supported by a stronger improvement in domestic demand, but also Philippines export has held quite well recently. So for those reasons, we think Philippines will be able to register growth of 6.3% for next year.
Okay, thank you, Dr. Khor. There's a question on U.S. trade policy again. Which ASEAN+3 countries are most likely to benefit? Most likely to benefit from the U.S. trade policy changes, and which ones may face the most significant challenges? And a related question from the SCMP, the issue of China-U.S. transshipments through ASEAN countries. What can and will ASEAN members do to stop transshipments?
As I mentioned earlier, with the tariff that Trump may impose on the region, there's likely to be a reconfiguration of trade. And what we've seen from the previous past several years is that the trade has shifted from export has shifted from China to the region, and that's a very simple reason why that's the case, because the region has built up a very strong manufacturing ecosystem. So many of the MNCs, when they shift out of China, they have to decide where to go next. And, ASEAN countries become a natural location for many of them. So we have seen this in Vietnam, in Thailand, in Malaysia, in Cambodia, and also Indonesia to some extent. So there will be, countries in the region which will benefit from this reconfiguration of trade. And also, more recently, the region has signed this regional trade agreement, the RCEP. And one of the benefit of RCEP is that there will be no tax on intermediate goods. Okay, and because of that, it has actually created a common platform production base for the manufacturers, because they can ship their goods freely from one country to another for processing. And this is one advantage I think the region has in terms of so we expect that, because of the tariff imposed on the region, there will be a reconfiguration of trade, and many of the countries in ASEAN will benefit from the reconfiguration, simply because they have built up such a ecosystem in manufacturing. So Malaysia, will be a natural location for many of the electronic factories. And whereas in the case of Thailand, they could benefit from the auto industry, So different countries have their own comparative advantage, which they can leverage on. Whereas a country like Indonesia, they have natural resources, nickel and all that. And so they are attracting a lot of companies in the EV space to move to produce in Indonesia, as well as also to produce the battery, because of the nickel deposit that they have.
Okay, thank you, Dr. Khor. We have a question from Perry Post in Cambodia. Cambodia's forecast GDP growth for this year has been revised down only slightly, but the revision for the projected inflation is significant. Why is that? And the second question from newspapers: what is the effect on Cambodia's credit growth and banking system, assuming the US dollar strengthens further, along with interest rates staying higher for longer? That's on Cambodia.
Yeah, Cambodia's growth is, we shift it slightly down to 5.8 from 5.9. And that's because the outturn, I think, in the previous quarter was not as strong. But it's still a very strong growth, because Cambodia has actually been hit quite badly during the pandemic. And despite all that, it has remained relatively resilient. And, more recently, it attracted a lot of manufacturing FDIs from China. And we see that the government, industry, and also the other manufacturing export have turned around. So the export have turned around quite strongly last year, especially the garments, solar panel, and all that. And this year we expect the export to continue to be quite strong. But at the same time, there was a lot of scarring of the economy from the pandemic. And we see that in the balance sheet of the many companies, and also in the real estate sector, which is why our growth is 5.8, is below the pre-pandemic level, which is around 6 to 7%. But there is definitely potential for Cambodia to grow more strongly going forward as the economy begins to heal. So 5.8%, in our view, is a relatively strong performance, given the scarring that has happened because of the pandemic. On the inflation front, we know that we reduced the inflation forecast from 2.3 to 1.5, and that's because I think Cambodia has a highly dollarized economy, which is linked to the US dollar, mostly US dollar rather. And because of that, inflation is basically very much imported inflation. And because it is US dollar is very strong, that has reduced the price of imports. And I think that's one reason why inflation has come down as well.
Thank you. We also got a similar question from Khmer Times on Outlook, but I hope Dr. Khor has answered it already. Let's turn to Vietnam. Vietnam is projected to achieve 6.5% growth in 2025. What are the key factors driving Vietnam's economic growth amid the global trade tensions?
Yeah, Vietnam is another strong performer in our region. Last year, it grew by 7.1%, which was above our earlier forecast of 6.2%. It's turned out that end of the year, there was a very strong spurt in growth, mostly driven by exports. But we also know the authorities have, very concerned about the growth rate, and they were, providing a lot of supportive measures to the economy. For next year, our growth forecast is 6.5%, which is a little bit lower than what our original forecast. But that's because we expect the economy to normalize after the very strong rebound last year, to settle down to a more sustainable growth rate. So 6.5% is very close to our potential growth forecast.
Okay. Thank you, Dr. Khor. And back to our home country here in Singapore, we got a question from the Lenha Zhao Bao. What are the main reasons AMRO revised Singapore's GDP growth from 2% to 2.7%?
Well, Singapore's growth, as you can see from there, was revised up from 2.4 to 4% last year. Singapore is a highly open economy, and sometimes it's not easy to forecast the growth because it can be driven by I think towards the end of the year, very sharp growth in export. At the same time, the year before, it was hit very badly by the strong headwind from the external side. So for next year, we expect this to continue in terms of the recovery in the export sector, and that's one reason why we have revised up our growth forecast from 2 to 2.7%. Our assessment is that potential growth is close to 2.5%, and so this is slightly higher than our potential growth, but it's also a recovery from a low base back in 2023, which was 1.1%.
Okay. One more question from Business World. Amid the external risks, why does AMRO keep its growth forecast for 2024 and next year? Based on the annual report. They generally mean, why is AMRO still so optimistic?
For the whole region?
Yeah, that's on the regional. Yeah.
Yeah. So, this is based on our assessment that the region is very resilient, and our basically observation, from the COVID period, where the region has demonstrated, its ability to absorb shocks and rebound very, very sharply. So 4.2% is our current estimate of regional growth. So despite the many uncertainties that's facing the region, we still believe that the region can sustain growth of around 4.2% or around that area. It would be one of the strongest growth, I think, in the world. And so the region will be one of the major drivers of growth.
Okay, all right. I think that's about it. We have taken quite a lot of questions. So yeah, I think we're ready to conclude the press briefing here since we don't have more questions for now. Okay. So for more details of the AREO update today, you can scan this code on the screen to download the report. And on the flagship AREO report with thematic chapters, so we'll be launching this in April. So I hope we'll be seeing you again in April. All right. So thank you very much for your participation, and thank you, Dr. Khor and Ellen.
Thank you, Daisy.
Thank you.